Recording in progress.
Good morning, everyone. Good morning. Welcome to another JMMB Group investor briefing. At this particular briefing, we're going to be discussing the results, the outcome of our fourth and final quarter, and certainly the end of the financial year for JMMB Group, which officially ended on the 31st of March 2023. I am Carrie-Ann Stimson. I'm the Group Chief Marketing Officer here at JMMB, and I'm very happy to be moderating another session here with you. We welcome everyone who is joining via Zoom or our website or on YouTube, social media. Thank you so much for coming on board. And the format of the briefing is going to be traditionally how we normally do it. We will start off with our presentation, which is a master presentation comprising of slides and different presenters sharing different aspects of what would have occurred in the financial year. And then we're going to open the floor. Having concluded the presentations, we're going to open the floor to invite questions from our participants. And we have a number of our team leads, team members, and other subject matter experts standing by to answer. And we'll get through as many questions as we can, time providing, and we will, of course, address any of those we're not able to get to after the closing of this session. So welcome again, everybody. We're very happy to be here, and I'm going to kick off this morning's briefing by inviting, as always, our Group CEO, Mr. Keith Duncan, to start the presentation and to add his welcome. Good morning, Sir Keith.
Good morning. Thank you, Carrie-Ann, and welcome to all the media community, the analyst community, shareholders, clients, and everyone, and all who have contributed to making today happen. And I will start by setting the context around where we are as a group, where we are in the context of the macroeconomic environment that we face. We're going through, globally, we're going through inflationary period, which causes volatility in asset prices, and basically we have been through globally rising interest rates over the last 12 to 15 months. In Jamaica, for sure, over the last 15 months, and the Dominican Republic, interest rates have been increasing. And as a result of that, what you would see is that you would have compressed margins, net interest income, because we're not able to pass on the increased interest rates as we would, which would be what you would normally do to our clients and to especially on the banking side, and especially on the cost of funds side, where we have to make adjustments reflecting market rates to our clients. So therefore, what we have seen is interest rates increasing significantly in Jamaica from 50 basis points 15 months ago to now at 7%, which interest rates are holding. In the Dominican Republic, we have seen interest rates increasing from about 3% to about 8.5%, and now beginning to reduce. In Trinidad and Tobago, what we have seen is interest rates have been held flat, which has been had a positive impact in the fact that we haven't had the monetary policy tightening in Trinidad that we have had in our two other major markets, the Dominican Republic and Trinidad. As a result of that, it has created a challenging environment because of the tightening monetary policy. However, the JMMB Group was able to deliver growth in a challenging environment. We grew in our asset base from $613 to $665 billion, at 8% growth in our asset base. So organic growth continues at JMMB despite narrow margins. And we see that reflected in our core business line item, net interest income, which is marginally down from 11.8 billion to 11.1 billion. And that is on growth of 8%. Therefore, what we have had is compressed margins. Another line item which impacts us significantly is the gain on securities traded. JMMB has a history and has a competence in trading securities, equities, bonds, and in a market where asset prices, due to increase in interest rates, decline, and there is more volatility. What is happening is that opportunities there for trading securities is not there as we would like. However, that's just a function of the macroeconomic environment, and we do have to adjust to this macroeconomic environment. On that basis, we were able to, based on our strategy of consolidation, diversification, we were able to achieve a credible performance in terms of group profitability of $6.3 billion. And, that follows an extremely good year when we were in a more accommodative macroeconomic environment in the previous year. Now, the investment business line, as I was alluding to, would have been more significantly impacted because this is where you own fixed income instruments at fixed rates. So therefore, they're not variable in return, and therefore, what occurs is that as interest rates go up, our cost of funds go up, but a yield on our portfolio, the interest that we continue to earn on our portfolio remains flat. So that would compress the margins on our net interest income on our investment portfolio, mainly in the Dominican Republic and Trinidad. And so that's a business line that has done tremendously well for JMMB since inception of JMMB. But we're in an economic cycle. We have to roll with the punches, and that's what we have done. And therefore, those opportunities for trading securities are not as we would like, but that's a function of the environment. Now, as we move forward, what we're seeing is the interest rates continue to be high, and what happens is that once interest rates go up, then asset prices fall. So that you would see that impact on our balance sheet. So what we're happy about is that within the Trinidad and Tobago market, Trinidad has been able to deliver great results with a great team in the last year, and that has been driven by the fact that the central bank in Trinidad and Tobago has kept monetary policy accommodative. In other words, they haven't tightened liquidity and they haven't increased interest rates. So the group financial results basically reflect the macroeconomic environment we face globally, and it particularly impacted in Jamaica and Trinidad. So therefore, we continue with our strategy. And our strategy is revenue diversification through country, in terms of we're in 3 jurisdictions, Jamaica, Domrep, and Trinidad. And business lines, with our banking business lines, with our investments business line, and also our other business lines, including remittances, insurance, brokerage in Jamaica, which continue to do very well for us. The major investment that we made a couple of years ago in the Sagicor Finance continues to deliver good results. And this is almost a hedge for us because in terms of our profitability of the group, because in a rising interest rate environment, insurance business line tends to do better than investment and banking business lines. So we do have a hedge in terms of that diversification, which has shored up our results over the year. And we're happy about that. So as I said, bottom line is that we're solid, we're safe, we're adequately capitalized, as Mr. Ellis, our Group CFO, will get into in a bit. We continue to ride this economic cycle. We have still continued to get positive corporate credit ratings from our rating agencies. Our multilaterals continue to have faith and confidence in us. With our IDB being an international funding partner, we continue to build out a really positive relationship with them. We continue to bolster our operational controls because, as we know, we can see that there have been many incidents of across the financial sector globally and locally, cyber fraud, etc. So we continue to build out our security, our controls, etc., to ensure and protect our clients. We continue with our efforts to centralize for operational efficiency, to centralize, standardize, and digitize our operations, to improve efficiency and invest in the development of our people, which is core to who we are as the JMMB Group. I was speaking to the investment business line, the banking business line, while we continue to grow, it still has been impacted by the net interest income because we have not passed on the full impact of the increase in interest rates in the Dominican Republic and in Jamaica to our clients. So, for example, where the Bank of Jamaica would have increased interest rates by 650 basis points or 6.5%, we would have passed on a fraction of that to our clients because we have to ensure that our clients can be sustainable, that they don't become a non-performing in terms of they're not able to manage their payments and their loan goes into a non-performing. So we have to manage that very, very carefully. So as a result of that, while we have grown our banking portfolio and our loan portfolio significantly across the group, we have sought to protect our clients to ensure that they remain whole. And that is reflected in our non-performing ratio, which remains fairly low, around industry standard, right? Our growth in our loan portfolio across the group is at 25%. That's significantly higher than industry levels. So this is an area that we have targeted for growth. Why? Because loans are variable, even though we're not passing all the full impact. Loans are variable and therefore the market risk around loans are much lower than the investment portfolio. And we will see that within the group balance sheet, our loan portfolio grew by 25%, faster than market. But our investment portfolio grew at only about 2 to 3% because we have had to consolidate there and really target growth on our loan portfolio and our off-balance sheet in terms of our unit trusts, our mutual funds across the region. SFC diversification, as I discussed earlier, continues to give us really good numbers. We were able to net $2.7 billion in net earnings, which was approximately 43% of our profits. So that investment continues to do very well for us. One thing we're clear is that JMMB strategy is one which consolidates, which diversifies, and which drives revenue streams that we believe are more have a greater return on capital in this period of time. We are comfortable that, as we pass through this economic cycle, we will continue our growth. As we have said, we have continued to grow our balance sheet, albeit at lower margins. Thank you.
Thank you, Keith. Very much appreciated, as always. Setting the context as Group CEO of what has basically been happening, certainly over the last financial year and even very recently, but also important to share what's been happening regionally, not just in Jamaica, but certainly in the countries in which we operate, namely Trinidad and Tobago and the Dominican Republic. So now I'm going to hand over to our Group CFO, who is Patrick Ellis. And Patrick is going to dig a little deeper, certainly, in the numbers specifically pertaining to our financial performance over the year. Patrick?
All right. Thank you, Kerry. I think he did an excellent job of setting the context and in terms of the overall picture of our group results. Our group earnings in terms of audited that we published for the financial year showed net earnings of 6.3 billion. And looking at the overall results, while it's down year over year in an excellent market environment in the prior year, I think our CEO highlighted the rising interest rate environment where we would have had compressed spreads. You have seen our NII at 11.2 billion, basically flat year over year. And what that signifies is that we would have grown our loan portfolio in the core business area by 25% or 36 billion, However, with the increased cost of funds and reducing spreads, you would have seen that impact in our NII basically flat 11.2 compared to 11.8 in the prior year. Nonetheless, a very credible number in terms of our overall earning. Total operating revenue of 23.4 billion, down 12%, and the main line items where we would have been impacted here would have been our gains on securities trading at 3.5 billion in the current year, down 52%, and of 7.5 in the prior year. And when you look at that, is in an increased interest rate environment, your mark-to-market or fair value losses on your investment, the opportunity for trading would not be there. And hence, our business line in terms of our invested business line would have been impacted. However, part of the group strategy would have been to diversify our business lines. And when you look at our net interest income and gains and securities trading, as a percentage of total revenue in the prior year would have been 72%. In the current year, that would be approximately 63%, and impacted by your gains and securities trading. But what we call our revenue diversification and our smart growth strategy is what would have compensated for some of the impact that we would have had on our net interest income on our gains and securities trading. So on our FX, our remittance business line, we would have been up by 26% to 3.3 billion. Our off-balance sheet and managed funds to 2.1 billion, up 2%. On our capital markets business line, one of the newer business lines within the group, continue to provide excellent service and funding our needs of our clients. So this is where a JMMB Group will show strength in terms of, while impacting on our investment business line, continue to bolster in other areas, and that is through our smart growth strategy. And in executing this smart growth strategy, what it does, it utilizes less capital. So there's more capital within the group for distribution to subsidiaries and bolstering other business lines. In terms of our expenses, you'd have seen our expenses grown by 7%. We spoke to inflationary increase of about 5%. The digitization and standardization of our IT platform throughout the group, in our banking platform right across all 3 territories. In addition to that, standardizing our financial reporting platform. And our CEO also mentioned the fact of bolstering security within the group in terms of protecting our clients. Those are some of the things that would have driven the cost. As a result of that, your operating efficiency ratio, which is a ratio that we manage and we monitor very closely, and that is a function of the growth in your revenue compared to the growth in your expense. With the impact on your revenue, on your gains and securities trading that we just mentioned on your NII, and the increase of 7% on your expense line, your efficiency ratio would have reduced somewhat from 69 to 84%. However, we see this as temporary, an investment in the group. Long term, we expect the ratio to recover and to be where it was back in the 60s going forward. In terms of the drivers of growth, and this is one of the slides I like to highlight for our stakeholders, the diversification within the JMMB Group. You would have seen where in Jamaica our investment business line would have impacted. You see a diversification of profitability throughout the group. 1.3 billion within Jamaica. Jamaica earnings would have been down, impacted through the investment business line. However, when you look at Trinidad, Trinidad would have been up by 35%, up to $1 billion as a result of the favorable market environment. DR also 1.2, and the strategic investment in Sagicor paying off, contributing 2.6 billion. So when you look at the picture of our profitability, you see very diversified earnings right across the group throughout all three regions. Showing a lot in terms of the diversification, Sagicor that would have continues to provide great results for the group, very strategic investment. Our stake is now at 23.32, up from 22.5. 40 billion on our balance sheet, 2.7 billion in earnings, and 1.1 billion in terms of cash flow coming back to the group. We expect going forward very positive earnings from SFC. They have recently announced to the market a possible acquisition of a Canadian insurance entity, Ivari, an entity that generates very good profitability, which would add significant value to the group and hence adding significant value to the JMMB Group. Still highlighting some diversification by country. Trinidad, as we would have said, 25% in operating revenue, 5.9 billion. DR contributing another 4.5 billion at 18%, and Jamaica, the lion's share, which would include FSC as part of that at 57%. So your investments is working for you throughout all three regions, ensuring positive earnings and also positive profitability. In terms of another cut showing our diversification on our banking and our financial services, you will have seen banking contributing 57% of that and 39% on the financial services. And this is part of a deliberate strategy whereby where your investment business line is impacted through the high interest rate environment, the growth in your loan book of 25%, approximately 36 billion on our loan portfolio, a non-performing loan ratio of market within 3 to 4% overall for the group. So JMMB continues to provide core business line growth through a diversification strategy. Our balance sheet, which shows the health of our entity, of the group, overall 8% growth in total asset, 665 billion. Mainly our loan and advances, as I just mentioned, growing to 178 billion, or 36 billion growth, or 25% in the year. Investment portfolio, 10 billion or 3%, and that would have been strategic as well as we focus on our core areas. That was mainly funded, those assets were mainly funded by our customer deposits. It showed a 14% growth. Our repos 7%, but also added to that would be our multilateral funding through our IDB and our DBJ, which contributed 16 billion on our balance sheet at the financial year, but overall growth of about 3.5 billion. In terms of our capital, very important, we are as a group, we're highly regulated in all three territories. Capital shows the strength of the JMMB Group, and it's the funding, the platform that we use for diversification and the organic and inorganic growth. All entities, all regulated entities within the JMMB Group are adequately capitalized. We have met all our regulatory ratios and exceeded them by much significantly. The ratios are there, 18% in investment compared to the requirement of 10. In the bank, we are at 12 versus 10. DR 67% versus the 15% required, and 14% in Trinidad versus the 10 required by the regulation. So the JMMB Group, as you can see, is adequately capitalized, and it's bolstered in the year by our retained earnings of 6 billion. And we are impacted somewhat by the mark-to-market, but as the market stabilizes in terms of interest rates stabilizing and coming down, that we will continue to see an improvement going forward. And that's my little snippet, Kerry, and I'll hand over back to you.
Thank you, Patrick. As always, welcome Patrick's overview of the numbers. And of course, we're now going to continue our presentation with, I call it a special segment. Of course, not only is JMMB Group a publicly listed company, we're also a member of the Jamaica Stock Exchange. And as we like to say, we're the largest retail stockbroker, certainly in Jamaica. And we always like to introduce some information into the presentation about what's happening or what has happened on the equities markets over the period. And so we are inviting our Assistant General Manager, one of our subject matter experts here, Greg Lindo, Assistant General Manager of Trading and Treasury. Greg, over to you.
Good morning, everyone. Thank you for having me. So I'm just going to talk a little bit about the market environment, which, our Group CFO and Group CEO have covered in some ways. So we are against the backdrop of a high interest rate environment, which, of course, the common theory is, when interest rates are high, equities tend to underperform. So if we look at the performance of the markets over the period for our financial year, we would have seen a negative performance in the financial index, the select index, the main index. And of course, our stock price would have trended along with that performance. Of course, with high interest rates, you'll find a segment of the market being attracted to short-term money market securities like BOJ CDs, which it was 8.49% as at the end of March, but up to the last auction, CD rates have pushed above 10%. So with that being said, there has been quite a bit of pressure in the local equities, negative pressure, I should say, on the local equities markets. And of course, what's happening in the wider environment has manifested itself in how we see the activity playing out. For instance, if we look at the performance of the JSE year to date in terms of trade value, you would have seen a 67% decline up to the end of June. If you looked at even the number of transactions, which is an indicator as to how many persons are trading, we would have seen a material decline of about 57% in the number of transactions. So there's less trading, there's less liquidity in the equities market, and it's reasonable for us to understand why, given that the central bank has been keeping the monetary environment pretty tight, ensuring that they do what they have to do to control inflation. We do anticipate some improvements in the markets once these measures start to be relaxed in some way. But for now, this is what we're faced with. And of course, I do expect our stock to continue to perform more or less inside of where the market is. It's a similar thing in Trinidad, but as Keith would have mentioned, there would not have been any interest rate actions. So there was negative movement in that market, but not to the extent of what we've seen in Jamaica. So there has been quite a bit of selling pressure in Trinidad on the cross listings in general, but that, a lot of that can be related to the need for FX and that sort of activity. So generally speaking, the performance of the stock was negative for the year, in line with kind of what we saw with the market. I think through some of the initiatives that we have elaborated on and announced, we do have a positive outlook for the future. So that is where, I will leave it. Kerry, over to you.
Thank you so much, Greg. Appreciate the insights as always. So now we are going to hand over to our General Manager of Digital Services, Gifford Rankin, who is going to give us an update on that aspect of our operations. Gifford, over to you.
Good morning, team, and good morning to our guest. All right, let me give you an update as what's happening in our digital services space. Can everybody hear me clearly?
Yes, we can.
All right,
Yes,
great.
yes, we can. Thank you.
All right. For those of our clients who prefer to do in-branch services, they would have seen a change in our branches recently. We have launched our queue management system, right? This is a group-wide initiative to improve our client in-branch experience. It's really streamlining our organization, timeliness, and quality of service delivery, right? The QMS system is going to provide us really key data to help solve our client pain points, right? Right? It empowers clients to manage their wait time. It will now tell you what your wait time is. It gives you the opportunity, if you have a long wait for a specific service, that you can run an errand and come back and not lose your place in queue. It also gives us real-time feedback. And you know, JMMB is about service. So your concerns are important to us, your suggestions. So we give you a brief survey at the end where you can help us improve and serve you better. So as I said, it's a group-wide initiative. All locations in Jamaica have been completely rolled out. It's also there in the DR, and we have it happening in Trinidad as well. We've gotten very positive feedback so far and really great recommendations of how we can improve our services. So, you know, if you're ever stopping by a branch, you'll definitely see our new queue management system. Coming up shortly in this month here, we'll be reaching out to our MT, our money transfer clients. They will have a card that is made available to them where they can now stop going to locations to collect their money transfer. You can have it loaded onto your card immediately. It is a Visa card that can be used online, at POS, at the ATM. So this is really providing that digital experience to our MT clients, right? Now, I know Greg just spoke about the equities market, and our clients have really enjoyed using JMMB Moneyline for purchasing IPOs. We are launching a new initiative where non-JMMB clients of other brokers can enjoy, you know, the experience that our clients have been enjoying for a while. So look out in your emails for the launch of that. Is our IPO portal for all equity clients across Jamaica. It will be launched in Trinidad after, but we're launching in Jamaica first. Right? And I know everybody, you know, is waiting for me to say something about our Moneyline app. I think in our last investor briefing, we informed you that we changed directions. We were not happy with what was happening. And I'm happy to say that we are definitely liking our new path. It's looking very good. Stay tuned to your email to see if you are selected to participate in our beta testing, which is coming up in a few weeks, right? And then after the beta testing, it will release live to the public. As I said before earlier, that JMMB is all about feedback. We're all about helping our clients and doing it. So we're actually launching our digital assistant or our chatbot later on this month to our clients. Our digital assistant is called Joanna. Joanna, you will be able to write your question. She'll be able to provide answers to you timely. If Joanna can't answer, it will be passed to someone who will be better able to help, right? So look out for that. So that's what's happening in our digital space, Kerry. So back over to you.
Thank you so much, Gifford. Much appreciate the update, and I know it was very well appreciated as well by our viewing audience. So now we're going to hand over to another presenter who is going to give us an update on his particular area and business line of responsibility. He is Kareem. You're going to kill me. I don't remember Kareem's last name. Oh my goodness.
Tomlinson.
Kareem Tomlinson. You see, I know Kareem so well and we talk so much, but you know, we're not big on last names here at JMMB. We're very much a first name organization, so I always get stuck. Kareem, over to you. Kareem is our General Manager of JMMB Securities Limited, and he is going to be sharing about some exciting developments in that business line. Kareem, over to you. I owe you lunch.
All right, thank you very much, Kerry. I will hold you to that lunch promise. Thank you again, and good morning, everyone. As Patrick would have spoken to, JMMB's diversification strategy, continues to work well for us. We have not only diversified our business across countries, but also across, multiple business lines. So our private equity business line is one of the newer business lines that we would have introduced over the last year. And you may recall we would have launched Vertex SME Holdings, or private equity investment company, which is managed by JMMB Securities Limited. So JMMB is also the anchor investor in Vertex. And we had raised $1.5 billion. Right, so of that amount, we have deployed just about a half of that. We've invested in 2 completed deals, as you've seen here. One being a quick service restaurant operator out of Guyana that is growing, at a rate of knots, both in Guyana, and is looking to also grow across the Caribbean. And we are positioning ourselves to help to support that Caribbean-wide growth. So we're viewing that investment very positively today. The second one is one that will probably be announced fairly shortly, and it's an investment in a major car rental company. And I'm sure you'll hear more details on that as we progress. As at right now, we have a very, very strong pipeline that consists of 20 plus deals, which we expect to turn into investments pretty shortly. So, we are on a strong positive trajectory, and, we intend to continue to utilize our disciplined, investment approach. And we will be deploying that 1.5 billion in short order, right? So, I think the future for the private equity business line being, in the alternative investment space, continues to be bright. It is one of those business lines that is, it again provides that type of diversification benefits where it is able to benefit through different business cycles. So notwithstanding the challenging market conditions that we've noted, we do believe that the prospects for this particular business, which is a part of the wider JMMB Group, continues to look positive. So that's my quick update, Kerry. I will hand back over to you.
Thank you, Kareem. And again, apologies, you can hold me to the free lunch. But thank you so much for that update, Kareem. Exciting times, exciting things have been happening. And as you say, exciting times are ahead for your particular area. And of course, it inures to the benefit of the wider group. So we're looking forward to hearing more from you and the team in the future. So to wrap our presentation, I'm going to hand back to our CEO, but before I do so, just to remind our participants on Zoom that you will have the opportunity to submit questions in our Q&A section. So there is a Q&A button in Zoom. Feel free to drop your questions in there, and we will address them as soon as we've finished with the presentation. And without further ado, I will hand back to our group CEO, Keith Duncan, who will wrap the presentation on our behalf. Keith?
Thank you, Kerry, and thanks to the presenters, and thanks to everybody for their patience as we go through and give you some good context around our performance. Thank you, Patrick, for outlining the numbers and giving some details around that. And for Kareem and Greg that have provided updates on their particular areas. So now I'll go into where are we as a group and how we go forward. Now, what we know for sure is that from a macroeconomic perspective, we are now at the top of the cycle. Last year, for the whole year, what we saw was interest rates increasing, the US Fed increasing interest rates, the Dominican Republic Central Bank increasing interest rates, the Bank of Jamaica increasing interest rates. That was the last year. Where we are right now is what we have seen now is that the Bank of Jamaica has now held interest rates at 7% for the last couple of sittings since November of last year. So they have held interest rates, right? So therefore we seem to be at the top of the cycle. The US Fed held interest rates at their last sitting, right? The Dominican Republic central bank has begun to reduce interest rates, and they have had 2 reductions, one by 50 basis points and one by 25 basis points in the last 2 weeks or so. So therefore, what we see is that we're at the top of this economic cycle. The impact of the Ukraine war, impact on commodity prices are subsiding on oil prices. So therefore, we are at the top. What we expect over this year is that we'll see some monetary easing. We already see it in DR, in the Dominican Republic. We expect, and as the central bank in Jamaica has indicated, that they may be they are on hold, and they towards the mid to end of the year, I think they're projecting more towards the end of the year, where they will begin to reduce interest rates. What happens when we begin to reduce interest rates is the very opposite of what occurs when interest rates rise. Therefore, your margins start to improve. The opportunities for trading begin to improve. And therefore, the whole market environment is a lot more favorable to our growth strategies. So therefore, that's a positive outlook in terms of where we are. And I believe as a JMMB group, we have proved how resilient we can be through the economic cycles, and therefore you will have ups and you will have downs during cycles, and we have proven to be very resilient, right? In terms of the Trinidad and Tobago, what we see is that they have held, I didn't mention it, but they have held interest rates, and there's no indication that they are looking to increase interest rates. So Trinidad and Tobago should continue to perform. What we expect to see is a better performance out of Jamaica and the Dominican Republic, and Trinidad should continue on their growth path. The diversification, real estate, as we have diversified, and Kareem spoke to our entry into the private equity market. He has been working long and hard on getting us to this place where we are now making private equity investments. That's called diversification. That's asset allocation. That's offering clients other opportunities for diversifying their own portfolios, not only for JMMB diversifying their revenue streams, but for clients to be able to take advantage of private equity opportunities. In terms of, so that is good. The real estate business line is another one that we've been working on. We have a good real estate lead, and it's under the management of our executive, Paul Gray, Tracy Ann Crary, which I have to acknowledge her because she's a real dynamo. Loves her what she does, and she continues to lead in that area, and we expect really positive growth coming out of the real estate business line, and that again is diversification. Diversification not only for our revenue streams, but diversification opportunities for our clients as we offer them and investment opportunities in this area. Also through our unit trust vehicles, our off-balance sheet vehicles, where we have our real estate, the optimum fund, where we have real estate as an underlying asset in that portfolio. So JMMB continues to build out these new business lines, because what we want to do is ensure diversification opportunities, but we also want to ensure that we are offering clients opportunities. Because at the end of the day, what it is, as we pass through cycles and their ups and downs, we have a long-term shareholder value proposition which is sustainable, durable, and will continue to deliver returns to shareholders. And therefore, what we need to do as we go forward, and we're happy to say that our buyback program was approved by the Trinidad and Tobago Securities Exchange, and we will be now into this year kicking off that program of looking to, on weakness of share price or an opportunities, be able to ensure that we pick our spots to ensure that we can protect the downside on the share price. That is the objective of this, and this is an ongoing program, and we have allocated funds to this. Our remittance business line is a true performer for us over the last 5 years. Remittance business line has gone from very marginal profitability of maybe $5 million 5 years ago to over $250 million, and is a star performer for us. This is an area that we're going to put some focus around going into the next, going over to the next 5 years, because we expect to quadruple those numbers. And our Sharon Gibson, who is our CEO for JMMB Money Transfer, is very driven, target-oriented, and does not take prisoners. Right? So we're expecting Sharon to continue with her performance going forward. The digital, as we know, we have segregated the digital from the IT area because we want to focus around digital. And I would say Mr. Gifford Rankin has done a tremendous job. While we have had challenges with our app, I know that we're on the right track right now in terms of the moving into the beta phase, etc. So therefore, we apologize for the delay in delivering this because we know that the market would be, and our clients would be looking out for this. We're there now. We are comfortable that as we move through the beta testing phase, that we'll be able to deliver this year. And we continue to digitize operations. Now, in terms of how we go forward, and with our new Group Chief Investment Officer in place, Mr. Avinash Biseso, our Group Risk Manager, Mr. Derek Rajak, we have been very focused around our risk-adjusted return on capital and really focused around how we allocate our capital along the lines of where you get the greatest risk-adjusted, the greatest return, sorry, not the greatest risk, the greatest return adjusted for risk. Risk-adjusted return on capital. And this is a methodology that we'll be applying across business lines, across the countries, and we have begun to roll that out through the banking business line, and we are going to continue with this effort because we want to be very quantitative and very decisive in terms of how we allocate. And we will drill this right down to the profitability by product. Okay? So we're going to continue to drive efficient growth. We're going to continue with our standardization. There have been some difficulties with that over the last 2 years, but however, we are now on the back end of standardizing, as now the banking platform is now standardized across the region. We're happy that also that we're able to have the Bell Bank acquisition be integrated in the Dominican Republic. That too was fairly challenging, but I think we are working that through, and we will get there in short order. And just to end, because JMMB, we're our vision of love statement, and I want to make reference to a particular section because a lot of effort we have been putting into our corporate social responsibility. And I could not leave here today without speaking to the kind of effort that we're making. Jamaica has achieved a level of macroeconomic stability over the years. And 10 years of hard work and sacrifice by the Jamaican people to get us here. As a result of that, where we are as a country right now, we really need to focus on human capital development and focus on our people, on equipping them, education, early childhood. We need to focus on community development, right? We have over 100 communities defined by the Planning Institute of Jamaica as volatile and vulnerable, right? While I was president of the private sector organization of Jamaica, with the support of my group CFO, JMMB Group CFO, Mr. Patrick Ellis, we kicked off our program, Project STAR, right? Project STAR is about social transformation and renewal of communities, marginalized, depressed, vulnerable, volatile communities across Jamaica. We have gotten the great support of the private sector, over $300 million of multi-year commitments, and that is led by JMMB with over $60 million of multi-year commitments. Sandals Foundation, $50 million. Carreras, $30 million. Scotia is also a multi-year donor. NCB is a multi-year donor. Pricewaterhouse is our donor and auditor for Project STAR. Also Grace Kennedy, and among other corporates. And they have come on board because they realize that we do need to change reality and give our communities in Jamaica hope. And this will be done through social programs in the communities, from early childhood right through to social protection programs for our senior citizens, psychosocial programs for at-risk youth, etc. And we are working that through. You can't have social programs without having economic opportunities for our people. And therefore, we have built out our job creation program, and we are delivering jobs to those who just did not know how to access opportunities to get into jobs. We're delivering financial inclusion programs. We're going to work with the micro small businesses in these communities and the Jamaica Bankers Association, Jamaica Security Dealers Association, the microfinance people have come on board, the credit unions have come on board. So we're dealing with social programs and economic opportunities for our people. These communities, and we're working in partnership with the government of Jamaica, ministries, departments, and agencies, because once we collaborate and partner, we will be able to deliver results. But this cannot happen unless it's led by the community. So the communities have to own these programs for it to be sustainable, and it has to be collaborative for us to build out this community development model so that we can change reality and reduce incidents of crime and violence in these communities. If you deal with the root issues, which are social and economic root issues of crime and violence, what at the end of the day, what you will have is reduced crime and violence. And our target is in these communities, these 10 communities that we target, is to reduce crime and violence by 40%. Project STAR is up and running 1 year now. We're in East Downtown, Kingston, Rose Gardens, and Parade Gardens for 7 months, and there has not been one incident of gunshot in the past 3 months in Rose Gardens. We're making an impact. We have the early childhood programs for children, where children can now go to school, feeding programs, because attendance rates were low. That's just an example of what we're doing. And we are creating jobs for people. People are moving into jobs. So I'm asking our shareholders and invest in public to really take a look at this, to ensure that we can invest in the future of Jamaica. We can donate, we can contribute through the Jamaica Social Exchange, Social Stock Exchange platform. We can go through our banks, we can go online to the IPO platforms. All brokers are participating in this program. So I'm saying to wider Jamaica, get on board, forward, let's move with Project STAR for a better Jamaica. Thank you very much.
Thank you, Keith, and that is indeed an excellent way to end our presentation. And just to reiterate how easy it is, certainly as a JMMB client, or if you'd like to become a JMMB client and you have your EMMA account, your equity money management account, then what you can do is you can go online and actually purchase your shares in Project STAR, and it's going to be it already is bearing fruit. Thank you for sharing those numbers, Keith. I certainly didn't know, so it's great to know that, and we can continue as a nation to create impact in our most vulnerable communities by partnering with each other and with Project STAR to get it done. Thank you so much, Keith. Much appreciated. Great way to end our presentation. So of course, without further ado, we're going to head into our Q&A segment. We do have a few questions that have come in through various channels. First of all, acknowledging that we did have a question from Stephen Jackson about our expectations regarding benchmark interest rates, what I believe Keith spoke to that in his final segment. So thank you so much, Stephen. Thank you for joining. Much appreciated. Also wanted to welcome Kelleray Miles. Hi, Kelleray. Thank you so much for joining us. I just wanted to share her question, which we will direct to our General Manager Digital Services, Gifford Rankin. Kelleray says, good day. Hi, Kelleray. In light of the growth in digital, what is the progress to date on JMMB's plan to introduce a digital wallet? And that's the first question. And the part B is, in light of the change in banknotes, please also shed light on JMMB Bank's readiness in this area, i.e. having our ATMs ready, etc. So Gifford, I know you've been prepared with a response. Please, over to you.
Good morning again, team. Good morning, Kelleray. Okay, we are making great progress with our partners on our wallet. Can't give any more details until we have, all the necessary approvals and, all our T's have been crossed and I's have been dotted. But stay tuned and you'll definitely hear more about that in the near future. With regards to the change in the banknotes, all JMMB ATMs except for 2 accept the new polymer notes. So you can deposit it at all our smart machines except for our Spanish Town and our Junction branch currently. All of the machine, we are in the process of changing them to dispense. We have completed about 10% of the fleet to dispense the new polymer notes, and the team is actively working on that with our ATM custodians. So over the next 2 weeks, all our machines should now be upgraded to both deposit and dispense the new notes.
Thank you so much, Gifford, for that update. And I know we are excited about this transition and looking forward to its completion in the coming couple of weeks. Thank you for that update, Gifford. So the next question coming from David Rose online, who is asking specifically about our activities in the Dominican Republic. His specific question is, what's the size of the combined JMMB Bank in the Dominican Republic there and its growth strategy going forward? And who better to answer this question but our country head of JMMB DomRep DR, Juan Jose Melo. Buenos días, Juan. Bienvenidos. Over to you.
Buenos días a todos. Good morning to all. Thank you for joining. So our asset side in the Dominican Republic is 137 million US dollars. We grew with the acquisition of Bell Bank around 27 million. As Keith mentioned earlier, we have completed the integration in our systems and also the full standardization with the banking platform for group. So it's been a lot of work. We're quite happy about that. In terms of our strategy moving forward, we continue to focus our efforts in the SME environment. We feel that maintaining a very strong relationship with the clients and being able to understand their needs so we can provide strong solutions for their needs, it's critical. At the same time, we've been working hard in strengthening our digital capabilities. We have already launched our Moneyline platform for all of our corporate and retail clients in the DR. And right now, one of the key points is to continue our strategy and launch debit cards and all the solutions that will allow our clients to have more efficient solutions and products in terms of their needs. I will also like to highlight that right now, as a key part of our strategy, it's training our team and making sure that they have a full understanding of all the solutions that the group can provide. So when they have a conversation with our clients, as it is our promise, we focus ourselves in understanding what they need and not necessarily in providing a specific product. So that way we make sure that as they grow and they transform their businesses and become bigger, we can join them in that process and especially support them moving forward. Thank you.
Thank you very much, Juan. Much appreciated and great to have you online as always. So moving on to another question here, still with David Rose at the moment. What's JMMB Group Limited's strategy going into the 2023-2024 financial year regarding mergers and acquisitions? A, and B, why did JMMB International get a capital injection from JMMB Group? Now, I know we have to tread carefully when we speak about future mergers and acquisitions. We don't want to get ourselves in trouble, but I'll certainly hand over to our group CFO, Patrick Ellis, who will give a response.
All right, thanks, Kerry. Well, David, the JMMB Group, as part of our strategy, if you look at our overall strategy for 2024, it's about the diversification. We continue to pursue that regionally and per business line. In terms of the existing strategy, we're pursuing what we call our smart growth strategy. And what that does, it focuses on more business line that does not require an extensive use of capital. So while you would have seen the impact to our investment business line on the gains and securities trading and NII, you would have seen a growth in our off-balance sheet products. You'd have seen growth in our cap markets. You would have seen also growth in our FX business line. So over the time going forward, you would continue to see growth in that area. In terms of mergers and acquisitions, we as a group, we have a business acquisition pipeline. It's part of how we manage the business, and we're always looking at opportunities across the region. So this is part of how we manage on a yearly basis. So you'd always have business opportunity, the group looking at those opportunities. In terms of the JMMB International, you would have seen the movement in rates across the market. JMMB International is a strategic entity for the JMMB Group. It hosts the Sagicor, the SFC investment. It has more of the long duration assets that provides cash flow for those investments. So it's all a part of the long-term growth strategy where we would have bolstered the capital for the entity in terms of those long-term strategic investment. But the group, that specific entity, if you look at its performance year over year, it's one of the more profitable entities within the group and provide great strategic initiatives for us.
Thank you very much, Patrick, and thanks as always, David, for your great questions. So I'm just going to acknowledge that we do have a few more questions in the Q&A. I'll just go through each one just in the interest of making sure that we address them. Stephen would have asked a question here. That's Stephen Jackson. Hi again, Stephen, about mentioning of interest rates going up, speaking to particularly credit card rates. So Stephen, we're going to reserve comment and response on that particular question. JMMB is not yet in the credit card space, and so we'd rather not comment on a business line that we're currently not in. It would really just be speculative on our part, and we wouldn't want to go there at this time. But when we enter, then check us back on that. Thank you so much, Stephen, as always, for your question. And a special welcome also to Al Edwards. Hi, Al, acknowledging your question, which was actually quite similar to the question that was just posed by David about our future plans. So we would have spoken to that in terms of entrance into other markets and so on. So thanks as always, Al, but also we'd also like to respond to your second question. And it's about our new building going up on Hope Road, right in the Ligani area there. It looks impressive. Thank you very much, Al. We appreciate it. And Al's question is, what business will it house? And will JMMB be focusing more on residential real estate rather than commercial? And I know Tracy is standing by. Yes, she is. We made sure that Tracy, who is our real estate guru, is online to respond to that question. That's my name for you, right, Tracy? Welcome.
Good morning, everyone. Thanks, Kerry. Thanks, Al, for that question. We're very proud of our building on the corner of Hope and Ligani Avenue. It's about 90%, north of 90% complete. It will host a mix of JMMB offices. We're finalizing the details, but it will also host a digital branch, a first of our kind, a flagship branch. In terms of the business line, our focus will be mostly on commercial and warehousing projects. We'll establish the business line using our existing land bank. Currently, we have 3 commercial office spaces in the design phase, and you'll hear more about that. We'll roll out about 100,000 square foot of office space over the next 2 to 3 years. So stay tuned. You'll hear more about our projects by the end of the year.
Thank you, Tracy. Appreciate that update. And Tracy, I think is it the first time you're with us on one of our investor briefings, I believe. Welcome. Thank you so much for being ready and online to answer. And to everyone's benefit, Tracy Ann Crary, and these long titles, folks. So let me do this. She's our Corporate Development Manager, Real Estate, Investment, research and portfolio management. So thank you, Tracy. A lot of stuff on your plate. But as Al said, it's looking great in Ligani, and we're excited about what's to come. So everyone, that is it for our Q&A segment. Thank you so very much for participating and submitting your questions. Of course, I would also like to thank all of my presenters who represented our wonderful group in fine style, of course, led by our CEO, Keith Duncan, and our CFO, to my right, Patrick Ellis, and the entire team online, Greg, Gifford, and Kareem, and everyone who would have supported with questions. Thank you so very much. And of course, we have to thank the entire team who put all of this together. As always, we appreciate the partnership. And most importantly, thank you to you, our viewers, our investors, and the investing public for tuning in and listening in. So on behalf of the JMMB Group team, thank you everyone, and wishing you a wonderful rest of the day.